Yo, what's goody? So today's video is another one of those educational kind of videos. It's about how I use futures in my trades and why I use futures in my trades. So basically, what futures are, um, to keep it very basic, it's a basket of a bunch of stocks. So there's two different futures that I watch. There's the Nasdaq and there's the S&P 500. So the Nasdaq is for the most part tech stocks, the big cap tech stocks, and then S&P 500 is just the 500 biggest companies in the United States, pretty much. So basically, the reason I watch futures is because when the entire basket of stocks moves in one direction or the other, it tends to carry certain stocks in that direction. So um, let's say NQ is moving up aggressively and you're looking for Tesla upside. Um, if Tesla is as strong or stronger than NQ, which is the NASDAQ futures, and the strength remains during the trade, you can expect that your upside break can happen. Let's say you're looking at Tesla downside, but NQ is strong throughout the day, and Tesla is weaker than the rest of the market. Your downside play might have some resistance since the entire basket is moving in one direction and you're trading against that. Now, let's say you're looking at Tesla downside. Nasdaq futures are moving up all day, and then all day could be 20 minutes. I'm usually gone pretty quick. So let's say those 20 minutes, Tesla's consolidating. It's stuck between a $2 range or whatever, which is pretty tight for Tesla. So Tesla's consolidating. Nasdaq futures are moving up. Now let's say whatever, Nasdaq starts coming down because it might be an overextended move or whatever. It just has to come back to reality. Knowing that Tesla has been consolidating all day, and if you're playing a key level that's right under the consolidation or whatever, now your basket of stocks goes from bullish to bearish in a way. Not necessarily bearish, but coming down. Knowing that Tesla was the weak link along this whole day or whatever, Tesla should break down below that consolidation, knowing that your futures basket is coming down with it. So basically, futures are what I'd like to say is the rising tide that carries all ships kind of thing. So if futures are moving up, expect most stocks to move up with it. If futures are moving down, expect most stocks to move down with it. I'm gonna show you basically what. So let me show you. So basically, the screen I'm showing you now. This is every stock that's listed in the Nasdaq. I might have to. Perfect. Okay, so that's every stock that's listed in the Nasdaq. You can see that some stocks are bigger than others. What that means is that it's more highly weighted in that basket. So usually the more highly weighted stocks move closer to futures. So on a tick by tick basis, Apple or Google or Microsoft will generally move the same with a little bit of variance than the entire futures basket. Now, if you come to a smaller stock, like, where is it? I'm looking for a specific one. Of course, I don't see it, but that sucks. Whatever. Oh, there it is. Okay. Netflix. So look at the size of Netflix versus the size of Google. Google is technically both of these. I don't know why they have two different tickers. They have a class C and a class A, but whatever. Look at Apple, look at Microsoft, look at Tesla, and look at Netflix. So Netflix is clearly smaller than all the rest of these. Amazon too, Meta, whatever. So Knowing the personality of Netflix, some days it does its own thing and it doesn't follow futures necessarily. It is still good to keep an eye on futures, but when stocks are more smally weighted, so I'd imagine these CrowdStrike, never even heard of this company, Zscaler, whatever, Autodesk, Workday, these might do more of its own thing versus something like Apple, Microsoft, Google, Amazon. Those will tend to move similar to the market. So depending on the stock you're trading, futures regardless will be important to watch, but depending on the stock, it might be more important to watch it when you're trading one versus the other. So this is just the NASDAQ, it's usually blocked out in most of my videos, which I'm sorry. I'll try to fix it. But NASDAQ is just this bottom corner chart on my screen. I just watch it on the 1 minute time frame. So let's say you're looking at an upside on whatever stock. So your stock has a green candle, and so okay, let me actually zoom in so we can get a good example. So you see right here, 937 candle. I'll put an arrow so you guys can see. 937, 937. So in this candle, the NQ, okay, yeah, you can see it. So in this candle, the NQ futures, it had a red candle, barely, but it is a red candle, while Tesla had pretty strong green candle. So that shows you that in this single minute, Tesla is stronger than the rest of the market, and you can see that that was a nice play if you played high of day or whatever. It wasn't a play I was looking at today. I actually was cash today. I'll prove it if you guys don't believe me. Monitor, nothing there, but whatever, beside the point. So seeing how your stock reacts while futures starts pulling back, or while futures pushes, or whatever the case may be, will help you in your conviction in the trade that you're looking at. But this is the NASDAQ. Let me cover my face again. These are the stocks listed in the NASDAQ. It's 100 stocks, the NASDAQ 100 obviously, and then the S&P. This is your S&P 500. So there's obviously more stocks here. You can see Google is still highly weighted, Microsoft, Apple, Nvidia, Amazon, Tesla. So watching futures will be very important trading these stocks or the stocks listed in either the S&P or the NASDAQ, because when the entire basket moves in one direction, your stock is likely to move with it, or it will have so you can look at it as like the rising tide that carries all ships. You can look at it as like a gravitational pull, however you want to think about it. Futures tends to carry stocks with it. There will be days where it's clear convergence, meaning your one stock might be doing a completely different thing than futures. So you can trade a little bit differently those days. So here's a good example. Tesla right here, that's a pretty small pullback, and in this time frame, look at how much NASDAQ pulled back. It gave up almost the entire gains of the day. So this shows you that during this time, that Tesla is holding up way better than the NASDAQ. So doesn't mean trade this by itself. I always have multiple points of conviction. So one of the main things is going to be, is this a key level worth playing? Which for me, I didn't have any key levels on Tesla. It's just pulling up as an example. But adding all these things is going to be pretty beneficial. I just saw something pretty weird. Okay, I'm getting distracted. I'm sorry. So basically, futures should be pretty simple. Just look at how your stock correlates against it. If your stock is weaker than it and you're looking at upside, that's a red flag. If your stock is stronger and you're looking at upside, green flag. If your stock is moving with futures, you have to now keep an eye on not only your stock's chart but the futures chart, because when futures make a move and your stock is moving closely to futures, you're likely going to have to react off of both charts. Sometimes your stock might lag by 15 seconds or whatever, so futures might have a big pump up, a short quick pump, and then your stock might take a couple seconds to react to that. So there was a AMD trade that I stopped out on that I posted, where this happened, and I think I was doing a voiceover or a recap or something. Basically, had I had a closer eye on futures, I could have stopped out at break even or down only 3-4%, but I ended up taking closer to a 10% loss. I don't remember exactly what it was, but knowing that my stock was reacting to the futures move, I could have got out sooner. So let's say you're looking at downside and futures has a big pump up, use that as a red flag. It doesn't necessarily mean get out right then, right there, but it could mean that depending on the circumstances. Holding through things like that, it can be a little bit risky, because if there's a big pump, there's likely going to be continuation, but every play is a little bit different, so do with that what you will. But this is basically how I use futures in my trades, why I use futures in my trades, some things to look out for, and some scenarios to use it. Okay, but that's pretty much it. Hope you guys enjoyed, hope you guys learned. Peace.